Good morning, traders. This is Brad Matheny again. Boy, what a big move in the SPY. Um, Huge gap up today on strong economic data. Manufacturing data came out, jobless data came out, retail sales came out. In fact, I'll highlight this real quickly. You can see the data right here. So we had a whole bunch of continuous jobless claims came in a little lower. Core retail sales came in about the same. Uh, now it looks like export price data was up quite a bit. Import price data was up a little bit. We have Philly manufacturing index was down, which is interesting, and New York manufacturing index was down a little stronger though than the previous week. So business conditions were weaker in Philadelphia. Employment was weaker. CapEx was higher. Fed prices paid was higher. Retail sales came in, moderately weak, but overall, year over year, come in strong, very strong. And again, this shows that we're not going to see the Fed really overreact to data yet. The data is just not supporting. Look at this retail sales year over year. So it's just not supporting a collapse in the economy yet. You're going to have other people telling you, all kinds of people telling you, it's going to crash. It's a stage 14, whatever. The whole idea here is the data is what drives the economy. And then remember, capital is like a living, breathing entity. It's always searching for the safest, most secure, healthiest environment to migrate to. I did an article about this about 5 years ago using like a squirrel or a rodent as an example, that if a squirrel or a rodent is setting up, let's call it a rodent, whatever, a burrowing rodent, if it's trying to live in an environment and the environment is good and is turning hostile, over time, that rodent is going to figure out that things are getting weaker and weaker for him to be able to support his family, hypothetically, have food, find resources, avoid threats. And what he's going to end up doing eventually, when he has to move further and further away to find food, he's probably going to go find some other area that is healthier. He may have to move, a mile or whatever, but he's going to find an area where food is more plentiful, and resources are more available, and threats are diminished, and success has a higher rate of return. And that's exactly what capital does. If capital finds threats or feels threats throughout the world, then it's going to move away from these threats, away from these hostile environments, and it's going to move into safer environments. We're now, if we hold up over here, and I still expect that little moderate downturn today, a counter trend, but this is a big gap, guys. We're talking a 1% gap. We're up 6 points on the SPY. We're up 220, 230 on the NASDAQ, 470 on the Dow, 50 on the on the ES and the SPX 500. It's a big move. Look at the Japanese yen, just rocketing higher. This is daily. So again, we're moving probably back into that downward trend. I'll come back here to 10 minutes. And essentially, you can take pretty much everything I said this morning about the pattern indicating where we were at the early morning area over here. You can take this entire trend right here and move it pretty much right up to here. So it's going to likely just waffle back down into the 546, 547 area. At this point, with this huge gap, we would want to defend this area here, the upper area of the, or the lower area of the price gap. And this defense area here, although still valid, really ends up being right here in terms of where price must defend, attempting to continue this move, this big move. And now, I got a call from a friend of mine yesterday. He was so funny. He was just teasing. This guy talked about a Vortex Rally, and I took everything and bet the farm, and anyway, he's an old friend, old trader, been around for 30 plus years. Nice guy. And you know what? I almost ought to call him this morning and go, well, you should be doing pretty good with the Vortex Rally right now, because this is a very solid move in the SPY. Remember, while everybody else has been telling you the market's going to crash, I called right down here on my weekend research to pretty much buy everything. This was the bottom. I thought that this was it. It was going to roll around and change direction. And sure enough, from where we opened on Monday up until now, we're up 7, almost 8%. Am I perfect all the time? Heck no. I'm human. I try to make the best decisions I can, the best research I can to support you guys. But you have to be aware, and you have to be able to, jump at the opportunities when they are available. So we are now rallying up in this area. We still have to get above this 550 area. But at this point, if we can hold above this low, 545 roughly, if we can hold above this lower gap area right here, then we're on our way up to 560 again, guys. This is a very clear breakout gap rally. This flag is invalidated. It no longer really matters at this point. We may see some rotation. We may see some type of sideways flagging. Like I could imagine that we come across this area here with some sort of sideways flagging like this, maybe off of some pullback. But again, I'm not seeing any real fear yet, guys. This is a very solid move. The Fed is not going to be capable of lowering rates efficiently into this data. And that means that we've got the rest of the year with the Fed potentially making a move higher, maybe a quarter point higher, if this data continues to persist into the end of the year. I mean, the Fed's really looking for the monetary process to slow. And as long as we continue to get retail sales, and as long as we continue to get fairly solid data, I think you're going to see that the Fed is incapable of really making that move. So be aware. Gold, real quick, rolled down. So you can see where we were at. We were down earlier. We are struggling with gold here. Okay. Gold, I know that everybody's looking like, where's that next leg, Brad? Where you told us it was going to be 2 legs. We had $100 move here. We're probably going to have $100 plus move here. I'm going to tell you again that I think that you're really looking at, there's my expectation. I think you're really looking at this area right here, around the 19th or the 20th. So buying into, again, late Friday or recent lows, like I told my followers this morning, anything below 2480, 2475 is a really good buy opportunity, in my opinion, just because we're holding at that level and we have this channel line moving up. So look over here. This is the lowest area I think we're going to get to, 2472. Okay, so I mean, logically, anything below 2480 would be buying near these recent lows. You could run a fairly safe stop. You don't have to be overly aggressive. All we're looking for is essentially buying near the lows, trying to catch this next leg, the second leg upward. And I think that second leg is going to run to about 2600, just under, maybe 2594, 2592, something like that. And I think it's really going to be, we can do it here. We can use Fibonacci extensions, come to the lowest point, to the rejection point, to the rejection point, and there you go. 2583. and then 2604. If I stick with these numbers, if I move this off of this rejection level here, then you're going 2571 to 2590. And if I go to the middle of this rejection area to this average rejection area here, you're going 2597 to 2577. So, you're really talking this area that I've highlighted right here is our target area for the next big move, and maybe up into this lower 2610, 2620 area. So be patient. Gold really needs to struggle through this sideways flagging, as I mentioned yesterday and today. I know you guys everybody wants it to just shoot straight up, but price is always either trending or flagging. And after this move, struggling to get above this previous high, not breaking above this previous high, this pause is building fuel for the next big move higher. So be aware that this is healthy, this is natural, this is to be expected. Okay, let's real quickly take a look at oil, see what oil's doing with the conflict. Flagging a bit, moving downward. So we do have, and remember, watch my training videos. I produced a whole bunch of videos. They're on TradingView called The Mechanics of Trading. They're very good for you to understand how to identify price trends, channels, and to kind of not necessarily draw everything I draw, but to see what's going on with price. So again, rejection point, come across a rejection point, come across a rejection point average, come across a rejection point average. And this is essentially a downward channel that oil is setting up in. It is kind of in an expanding wave here. You can see this move. And it would kind of make sense that, if we were to extend this channel to the right and extend this channel to the right, we could be looking at a downward trend in crude oil. Once it breaks below this $76 area, we could see a move down into this $66 area, potentially on weaker global demand. Now, what would weaker global demand look like? Weaker global demand would mean that the US economy is continuing to attempt to perform, but the global economy moves into some sort of stagflation or congestion period. So understand that it would not be uncommon for crude oil to move like this. And remember, we come back over here to a weekly chart of crude oil. We have been substantially lower than $66 in the past. This was the big COVID negative number, which was ungodly, but interestingly enough, I called this 5-6 months in advance. My prediction was $14. No, I suggested to everybody that crude would get down into this area, which, $14 crude. $14 crude is scary. If you understand crude oil, $14 crude is scary. And I made a prediction that crude oil would fall to $14 in that time frame. And you know what? I think everyone was surprised when this happened. And then we had this big rally out. So now understand that where we're at with this, we come back up to these rejection points, off of this rejection point down here, and it puts our 382 from a pullback here. We're right in the 382 and 50 area. You can see that right over here. We're right in between the 382 and 50 area. And if we fail at this area, we're going to get below this 50 area and attempt to move down to this 618 area. That'd be 5685. Again, and I do believe that is possible with crude oil. I think we're really looking at like I said, a decoupling event. I think that's going to be what happens in early 2025. And I think it's going to become more evident that global economies are decoupling from the US as we move into and closer through the election. All right, guys, that's it for now. Back to the SPY. Could be interesting to see a weekly chart here. I know I do a lot of drawing. I'm sorry if you guys, like I said, I know some people hate my charts because I draw, but like I told you, it's what works for me. It's not, I'm trying to show you what I see, what I believe is likely, but it's what works for me. Okay. And yes, I'm cleaning things up as we go. Like all of this, I can probably clean this up, and probably clean this up, clean these up. These are still valid, by the way. I'll just redraw them later. And there we go. Huge Vortex Rally setup. Look at this move. We've retraced almost 60% of this entire collapse right now on this Vortex Rally setup. Just massive. And just to remind you, Vortex Rally. Loving it. Really loving it. Okay, guys, that's it for now.